Podcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Happy Thursday here during the busy holiday season. Today, we are going to do a webinar about growing your business the healthy way with Peter Lang, who is an accountant who specializes in the unique accounting challenges faced by artistic professionals like interior designers. This is our fourth webinar in his guest series this year, so hopefully you do know who he is, but if not, he has a bachelor's in accounting, a master's in taxation. He's also a CPA, certified public accountant, and he is a certified DM accountant, so he's passed our test as well, with 16 years of experience under his belt. We just did some fun things down in High Point for Fall Market. We did some talks, we did some coaching sessions. Peter's very involved in the industry with Luann Niagara, among a lot of other industry contacts. So we had some fun. So we hope that you guys can take away some really key business information from the webinar. And during the webinar, when Peter asks questions, feel free to type them into the chat window or the questions pane, whichever you like better. And I will go ahead and announce those to him. Yeah, I think that's about it. Again, it's Lindsay with Design Manager Software. And of course, if you have any DM questions, we can handle those afterwards, or, you can email support@designmanager.com. Okay, take it away, Peter.
Thanks, Lindsay. Hi, everyone. Hope everyone's having a great day. Thanks for coming on and listening. Today, we're going to be talking about a couple of different types of topics that kind of flow into all one. So before I even get started, feel free to comment, and if we can get to your questions during it, and I'm certainly open for that. It's a really important time of year at the end of the year to be thinking about your finances and your taxes and that kind of stuff. So my goal today is to answer give you knowledge, obviously, but also to answer any questions you might have, so that with the next couple of weeks before the kind of the business is closing for the holidays, if you need to contact your accountant, you have specific questions or concerns after this that you can ask and hopefully get going in the right direction. So just to give you some information, I'm the founder of the Designer Cpa, and we are a virtual CPA firm. I'm actually in Rhode Island right now, but I have a team all over the country. We work virtually with interior designers all over the country, and we provide tax services and part-time CFO services, and we work closely with bookkeepers to make sure that you are in a right place when it comes to taxes and finances. So just some information. You can follow me on Instagram. I give you my email address in case you have any questions after the fact. Feel free to do that. Feel free to send me questions, and I'll be happy to get back to you and try to clear anything up. And you can visit my website as well. Okay, so quickly before we start, here's just a couple of different topics that we're going to talk about today. How often you should be communicating with your CPA. I want to talk about the difference between an independent contractor and an employee, and just kind of go over some systems and processes that either hopefully you have in place or you can put in place, just to give you some ideas of how to make the process during the year easier, so that everyone on your finance team is all on board and communicating throughout the year, and thus in turn will hopefully grow your profit, form a healthier business, and hopefully achieve the financial dreams that you have by starting your business. Okay, so the first topic, how often should you be communicating with your CPA? Before I even want to start this, I want you to think about these two questions, and there's no right or wrong answer, but just wondering, when was the last time you talked to your CPA, and does your business look different than it did 1 year ago? Now the answer to number two is yes, whether you know it or not. No time period over 1 year is going to look different. So if you could just kind of comment, and Lindsay's not going to, say who it was, but if you could just comment on the last time you talked to your CPA, or if you want to let us know how often you are in communication with your CPA, that would be great. Just so I have an idea of how often other CPAs are willing to talk to their clients.
So Peter, we have 8 years ago, we have 6 months ago, we have last week so far.
Oh, cool. Okay.
Quarterly.
8 years ago.
Yeah.
Well, I guess my question is, does everyone use a CPA, or if you don't use a CPA, is anyone doing their taxes on their own, or maybe you're using like an enrolled agent or a different type of tax preparer besides a CPA, which is perfectly fine. Always like to know, what other people are doing. And you also said 8 years, you said 6 months, and you said
Yep.
last week.
Yeah, and so we had quarterly and monthly also come in.
Okay. Oh, that's cool. All right. So obviously, no two accountants are going to be the same, and accountants have different types of businesses. So some accounting firms, if they concentrate on doing taxes, they're busy during tax season. They prepare your tax return, and then you might not hear from them for the rest of the year. So they might even work very hard in the first 4, 5, 6 months of the year, and then kind of take a break and catch up with other stuff in life, and then come back like this time of year and get ready to ramp up and do taxes again. Those accountants are ones that, it's like they got something done for you. They prepared your tax return, and then it's kind of like that's the end of that. Here at the Designer CPA, at a minimum, we speak with our clients quarterly. So if someone came to me and said, I need you to do my tax return, but I really don't need to talk to you more than once or twice a year, you're not eligible to be a client here, just because it's all up from us, and I think for everyone, it should be all about communicating, not only with the CPA, but if you have a bookkeeping team, or and that's always, if you're listening and you don't mind saying, do you have an outside bookkeeper or like an internal accountant who is working in your office or working virtually for you on your payroll, and they're helping you with all that stuff? I'd be interested to see what the kind of dynamics of that question is as well. But I believe that you should be speaking with your CPA on a quarterly basis, or at an absolute minimum twice a year. So maybe it's like at the time you are getting that tax return filed, and then again in the fall sometime, or closer to this time of year, maybe before, like around Thanksgiving, where we're talking about year-end kind of stuff, and seeing how the business did throughout the year. So just to give you kind of, in my industry, what happens, so there's quite a bit of different tax softwares that CPAs and tax preparers use. So just so you know, if you don't already know, when someone who prepares taxes gets the tax return complete, the software will just assume that whatever information happened, or whatever the profit was, and all that stuff that you need to calculate taxes, they just assume that the prior year is going to be the same as the following year, which we all know that everyone's business changes. There's no, you could have a year where you're tremendously growing. You could have a year where maybe your pipeline isn't as big, and maybe you're not making as much money, or you're even investing in the business and spending more money, so your profit looks lower than it actually is, or vice versa. Maybe you did a lot of investing in the year before, you're still having the same year, but your profit is much higher. We fall into traps when we don't speak to our accountants and our tax preparers throughout the year. So if you received that tax return and they gave you estimated payments to make and you've been diligent with that, you've saved money, you've made those payments, you could still be in for a tax surprise when it comes time to file your tax return. Because like I said, those numbers are based on as if nothing is going to change. So I would recommend, if you have not talked to your CPA yet this year, or if it was like in the spring or summer when you got your tax return done, giving them a call and getting back into communication with them is, I think, the best advice I could give you today. So let's see, ask your CPA if they can calculate a tax projection for you based on the current year activity. So again, the tax software is calculating everything based on nothing is changing, but every tax software, just so you know, every tax software gives you the ability to do a projection and kind of override the numbers based on what has actually happened during the year. And then if you have been making estimated payments, we give you credit for that. And then we can kind of come up with, if there's a balance due still, like a game plan for that. Even now, a game plan from now until you need to file your tax return in order to make sure that ideally, when you are filing your tax return, ideally what's nice is if you could just break even, right? So you haven't given too much to the government, but you're also not interested in a big tax surprise as well. Another question you can ask your CPA is, if you are incorporated and you're an owner and you're on payroll, you can send them your most recent pay stub and make sure that your CPA thinks that you have taken what's called a reasonable salary so far this year. Just so you know, a reasonable salary, the IRS wants every owner to take what's called a reasonable salary, and it's a vague kind of thing. It's not like the IRS gives a table and says, like, you know, this much experience, okay, like, you know, it's got to be this much. But your CPA or tax preparer can help you determine that. And if your CPA looks at it and says, no, you know, I don't think you have a reasonable salary, we as CPAs and tax preparers have the ability to manually calculate numbers so that before the end of the year, before the end of December, so if you have, you know, if you have one more pay period with your payroll company, or even if you've already if you do it once a year and you've already filed that because it's consistent every month, the payroll companies, it's a busy time of year for them too, and they have the ability to run special payrolls. So it's not too late to contact your CPA now and kind of take a look and make sure that all that information is, because they can kind of manipulate the numbers and make sure that your payroll ends up being in such a way that that you will in fact have a reasonable salary when it comes time after year end is over, and you're not going to have any issues with that. Does anybody, Lindsay, is there any other comments or any questions? I don't want to get too complicated with.
Not so far. We had a bunch of good responses saying that everybody seemed to have a good bookkeeper or an outside bookkeeper, like internal and external were both said, but they seem to be pretty happy with all that. So.
Okay, cool. All right. So obviously, I shouldn't say obviously, but if you have a good bookkeeper, that means that you're probably in communication with them maybe once, twice a month, maybe even weekly or a couple of times a week, even based on the size of your business. I think it's very important that everyone is also on the same page. And I've done other webinars with Design Manager based on this, and we went into more detail. But I think communication is the biggest thing. If everyone is willing to communicate with one another and on the same page, you're going to have a more profitable business. You're going to be in compliance, and your business is going to be healthier than if everyone kind of ignores one another. Okay, so make your CPA or tax preparer's job easier by reviewing your, and I listed 4 different things. So if most of the people who commented are happy with their bookkeeper, or whether they work in your office or they're an outside bookkeeper, then I imagine that you're on reoccurring a schedule with them to kind of make sure that your open client deposit report, your open vendor deposit report, and your aged accounts receivable and your aged accounts payable reports are all accurate. So as a CPA, I can't do an accurate tax projection unless these numbers are accurate. So because I only work in the design industry, I know how things change a lot. I always tell my clients before I even start with a tax projection, just to confirm, like, when's the last time you and your team looked at these reports? Are you confident that we have moved these you have moved things around so that when I look at these numbers, your profit number, which is what taxes are based on, is accurate? Because if I'm lazy and I'm a tax preparer and I'm lazy and I'm like, okay, fine, I'll do a tax projection for you because you made me, and then I say, like, just give me your reports and let me take a look, but I don't ask the question on whether or not, like, and maybe you're busy with a project that's lasted for 6 months and you guys just finished and you haven't kind of taken a step back and looked and made sure that those finished projects have been completely closed and these reports are accurate, then the numbers I'm calculating aren't accurate either, and so I'm just wasting everyone's time. I could give you a number and say, oh, I don't think you owe any money, or, oh, I think you owe a ton of money, and then you're making those payments in, but they're all, it's just a big waste of time. And then when you file your return, you might have given too much and let the IRS, hold on to money that you could use to either pay yourself or invest back in your business. So that is super important, to work with your bookkeeper or your internal accounting team and make sure that those reports are accurate. It all starts inside the business, and hopefully you have a CPA who is asking that question before a projection is done. Let's see. Also, you should confirm with your CPA which tax strategies you need to complete and finalize before year end. Okay, so what I mean by that is you have different types of tax credits and tax deductions and even decisions that you can make in order to save money on taxes. Well, making decisions before December 31st gives you a heck of a lot more options than waiting till next year to call your accountant and say, hey, it looks like we've got this really big profit. Can you tell me how to save some money? It could be too late. So having that conversation now before the end of the year is going to open the door to a lot of other options that your CPA could potentially do, and also give you advice in order to do things. So if you're thinking right now, geez, I think if I called my CPA or my tax preparer, they wouldn't even call me back, it's time to find a different tax preparer or CPA that will. Again, at a minimum, they should be willing to talk to you at least twice a year. Now, I just want to say, so I have this interesting perspective because I see how a lot of accountants are. My industry is very, most people that are like that, or I should say a lot of people, like your accountant, sometimes it can feel painful to have to communicate with your accountant, and I get that. Also, sometimes you could be thinking, well, geez, they do my tax return and I never hear from them, and I should hear from them. And the other reason why they might not is because they might not know that you want that communication. So when you call and you say, hey, I want a projection, they might say that, and then just know that the lack of communication might just be because they think you only paid to get a tax return, so that's all they're going to provide for you. So there might be an additional fee in order to do a projection, but that fee is going to be worth it to have the peace of mind to know that all of the different tax strategies that you could have used are available, and just to give you also the peace of mind that you're not going to have a huge tax surprise come when you give them their stuff, you do the tax, they do the tax return, and then you get this call that says you owe all this money and maybe you've already spent it. So that's the worst kind of news that as a tax preparer I can give, and that's why communication is mandatory at my firm. Before we start talking about the next topic, is there any other questions that I can address?
None yet, Peter.
Okay, no problem. So when we talked about what kind of topics we can talk about, when Lindsay and I talked about this throughout the year, I find this is a big topic that a lot of my clients will bring up, especially ones that might have always kind of worked on their own and they realize that they're growing quickly and that they need help. And so they'll say to me, I'm not really sure if I should be hiring just contractors. Do I need to hire an employee? So if you don't mind, if you're listening, and you can just kind of put in the comment section how many people are on your team, and also how many people are on payroll, if you have payroll, and how many people you have for contractors. And I'm not talking about just like subs, like plumbers and general contractors and electricians that work on that might be working on your projects. I'm talking more of like design assistants and maybe admin assistants and other types of people that are on your team working for you on a consistent basis. So while those come in, hopefully we get a lot of comments that come in, but some questions also that you need to think about as we talk about this topic is how often and consistent is this new person going to be working for you? So if it's just a little project, that can affect things. But if it's someone you're planning on having in the long term, that's going to affect the answer. Lindsay, did you want to?
Okay, so we have 6 on payroll, 0 contractors from someone. We have 8 people full-time. We have another 8 person, but it looks like they're part of a larger firm, which is 45 people.
Okay.
And then looks like 3 full-time people, and then okay, so the 8 people in the larger firm, that's actually most are on payroll, but 4 or 5 contractors.
Okay, cool. And if you are listening and you do process payroll and you love your payroll provider, if you want to kind of comment in the message area and just kind of give a shout out to your payroll provider, I always like to know who's using what kind of payroll providers and who is happy with them, only because it's something that as I get different questions, I'd like to know how many people are happy with theirs. So it sounds like most people have everyone on payroll, but if you have a situation where someone might come on and they want to be a contractor, or they say they want to be a contractor versus being an employee, let's go back and kind of just talk about some of the questions you need to consider as you think about hiring this person or bringing them on either temporarily or on a permanent basis. So how often and consistent the new person is going to be working for you is very important. Do they have exact hours and days that you'll be requiring them to work? So if you're thinking about hiring someone, you've probably already thought about what you need for them. What kind of role are they going to play a part in? Are they going to be doing mostly administrative work? Are they going to be a design assistant where they're responsible for billable time and they're going to be working directly on the projects, that kind of stuff? Are they going to be expected to be in and doing work at 9 a.m. every Tuesday? Or are they going to, is there a certain amount of hours and expectations that during this time you are definitely going to be working for me? Another question to consider is, does the person have other clients or work with other vendors? So if like for me, I have a couple of different contractors. They work part-time for me, but they also work part-time for many other people. So therefore, they are considered a contractor. So does the person use their own computer or supplies while he or she completes each task? Or do you tell them they have to be in your office and use your computer and make sure that they're doing it this way and working at this time? All of these questions will affect the answer to whether or not this person should be considered an independent contractor or should be considered an employee. Okay, so if you're telling the person when to be into work and on a consistent basis, most states are going to consider that person to be an employee. When in doubt, the person's probably an employee, and therefore payroll taxes should be paid by the business entity. So there's different rules, and the states, as they need more revenue, there's different states that have changed their rules so that they want as many people as possible to be employees. Why? Because then each business has to pay payroll taxes, which the IRS, that's like the IRS's bread and butter, payroll taxes, which are consistent taxes that need to get paid throughout the year. Okay, so when in doubt, that person is probably an employee. Payroll taxes should be paid by the business entity. Now, what if this person is going to, you're kind of like, well, listen, I just need you to complete this project. I know you work with other people, so maybe it's a bookkeeper who has 10 different clients. Maybe it's someone who's kind of doing design assistant work for you, but also like 4 other people, and they're just kind of on a project for a little while. They're maybe working virtually in their home office using their computer. They're logging into your design manager account on the cloud. And you're kind of like, listen, I don't care if you work at midnight or 8 o'clock in the morning, I just need this done. Well, then that kind of sounds like they're an independent contractor. So whether you find that you need contractors for them, or even if I'm going to introduce the concept of also if on a project you've got a GC or an electrician, a plumber, or that kind of person who's working on a project with you, or many different projects, but they also work on a ton of different projects and kind of have their own business, give you their own separate invoices. You absolutely want to make sure that you are presenting them with a W-9 or requesting a W-9 before you pay them. Because I've seen in the industry so many times where either a contractor will ask for cash or they'll ask for payment up front in order to get on their schedule. And then after the fact, the person might say, well, you know, I need a 1099, or their account might say, I need a 1099, get the W-9 for me, and then you don't get one. There are penalties the IRS came up with several years ago about making sure that you get a W-9 for all your contractors, anyone that gets paid over $600, and then issuing Form 1099s, which need to be filed by January 31st of the following year. Okay, so if you have a situation where you're thinking, you know, I didn't get a W-9 for that person, trying to get it might be hard, but it's something that I would recommend as soon as possible. And then going forward, absolutely, you want to put a plan into place, or some sort of system or process into place that before you, as you are looking for contractors for a job, you're giving them that W-9 to fill out. And if they refuse to fill it out, then it might not be the right person on your team, no matter how good of work. I know it's hard to find good help, but really in the eyes of the government, they want these 1099s to be filed. Does anybody have, is there any questions?
It doesn't look like it, but we had 2 people comment on the payroll services, one for
Okay.
ADP and one for Paychecks.
Okay, cool. Awesome. All right, you know what? So before we get to this last topic that I also want to talk about, I just want to let you know that if you have employees, I know a lot of people said that they do, I think as a lot of different people in the United States last year with the new changes in tax law had issues where maybe they had a bit of a surprise when their tax return was filed, and they might have had to owe a little more, or maybe their refund wasn't as high. You might have even heard it from your employees that kind of might have complained about that. So basically, not to get completely too boring, but just to let you know, the payroll tax, the amount of payroll tax that was taken out of everyone's checks changed as the tax law changed. And the IRS really didn't do a very good job of kind of telling everyone that, hey, you might need to go in and change your W-4 form based on that, so that you can confirm that enough taxes are being taken out of your check. So whether you're whether it's you that might have experienced this as an owner, or you or someone on your team that you're managing different people who might have complained about it, I just want to let you know that so when you hire someone or you take a job and you're an employee, you fill out those W-4 forms, those confusing, stupid W-4 forms that you kind of have to like glaze over and make a decision based on that. And whatever decision that you make is how much taxes they're going to withhold out of your paycheck. Just like when we talked earlier that there's ways to manipulate the payroll so that you have a reasonable salary, there's also ways to manipulate how much withholding that you're getting taken out by the end of the year and that kind of stuff. So long story short is that they are coming out with new W-4 forms in 2020 that supposedly are going to be easier to fill out and also will reflect the new tax law that is now over a year old, so it's not so new anymore. This is just, as an employer, something that you can keep in mind. And when they come out, and if you need the assistance of a bookkeeper or your accountant to get those, you might want to just print some new ones out, or even if you're using a payroll provider where you log into like ADP Run, or I know Paychex has like a dashboard kind of thing too, have your employees fill out new W-4 forms in 2020 when this comes out, so that they can not have to deal with the surprises of potentially changing payroll tax withholdings. And it kind of makes you look good, like you also care about your employees and just want to make sure that they all know that that's available, and give them kind of guidance on how to change that, so that come the following year when they file their tax return, they're not, getting any new surprises as well. So that came across my desk a couple of days ago, and I just wanted to make sure that everyone kind of had an idea that next year there'll be new forms coming out, and you should definitely fill a new one out and have your employees fill them out too. So the last topic that I want to talk about today is just kind of talking about some different systems and processes that you can be using throughout the year to grow a healthy business. So I know a lot of people who are listening right now, they said they either have a good bookkeeping team, or whether in-house or outside of house. You want to try to make sure that your bookkeeping is ideally updated on a weekly basis, and you also want to include those reports that we talked about as the projects start and stop, and getting those updated, especially your accounts receivable and your accounts payable. So if you're listening and you're not really sure what I'm talking about, so accounts receivable is anything that your clients invoices to your clients that are still outstanding. So hopefully, if you have any, ideally, as you send out proposals to clients, hopefully you're asking for 100% down, and you're including potential sales tax, and you're including potential, shipping and freight and that kind of stuff, and requesting all that money, so it's nothing more than just closing it out with the invoice. But if you are someone who maybe sends time bills out, and also someone who maybe requests less than 100% on a proposal, making sure you're getting those accounts receivable reports, invoices out to your customers as soon as possible is going to tremendously help your cash flow in your business. You don't want to be essentially kind of having your, your customers are kind of borrowing money from you the longer it goes on for. So I know we're all super busy, but making sure you are getting those time bills out if you work that way on an hourly rate consistently, so that your customers are gonna be get into that schedule, get used to that schedule, and expect a time bill, whether it's weekly or like twice a month or however often you do it. That's just gonna get them into it. They know, they get the time bill, and then they pay it, and then you're gonna get your money and be able to use that either on operating expenses or paying yourself a profit or something like that. That's good, and not like racking up a credit card bill because you're still waiting to get paid. Same thing for accounts payable. You want to make sure that your bookkeeper, your accounting team is putting in all of the vendor bills that come into the system, so that you're reviewing that and paying your bills on time, because there's nothing more if you've got a certain, let's say, company that delivers and does freight work for you. If you're not paying attention to the bills and enough get past due, and you've got this big project and you need help from them, they might say to you, hey, your bill is too far out and too high, and we're not doing any more work until we get paid. So keeping track of those two reports at a minimum and taking a look at that is just getting a system and a process in there, and just getting, even if it's like something where you're consistently putting it on your schedule, and everybody on the team knows that on, let's say, Wednesday morning at 9 a.m. first thing, we're all going to meet together and review and make sure that our accounts receivable and our accounts payable reports are accurate. And if there's anything on there where you need to kind of nudge the client to pay the bill, it's available for you and you can do that. So tracking time is important every day, whether you're billing on a flat fee or hourly. And I know how annoying that can be as an accountant, even who I here at the Designer CPA, we do fixed pricing in order to be transparent. Before we take on a customer, we send them a proposal kind of similar to you and let them know how much it's going to cost for the job. But I still need to keep track of everyone's time and see how billable people are, how long it's taking on the project, so that if I need to adjust a proposal or a fixed price amount, I could do that. So having everybody track time is really important. And I know in Design Manager there's a time tracking feature. So as annoying it is, I know it's annoying for me to do it as well. But getting yourself into the habit of forming a system and also letting your team know how important that is, and just kind of positively saying like, this is something that that's only going to help all of us to have a more profitable and just overall good experience, and getting that system into place is really important. You also are going to want to review your design assistant's billable time, and you want to compare each person's billable hours as a percentage of total hours. So depending on what you expect, kind of like before what we talked about, what are you expecting with your employees? So a design assistant may be as high as 80, 90, 100% billable. There's always going to be time where someone's not going to be billable. There's just the things that happen. But we like to see like someone who's only assisting on the projects. We want them to try to be 80 to 90% billable. And owners can be billable maybe everywhere between 50 to 80%. That kind of all depends on your business and what you want to accomplish. Are you doing most of the design work, or do you have a great team kind of doing that, and you're focusing more time on being out there and present and networking? You're on social media, you're doing that kind of stuff, so your billable time isn't going to be that much. But it's important to kind of keep track of time in order to not only make sure that your people are as staying as billable as possible, so they're almost paying for themselves to work for you, but also kind of keeping track of what is being done throughout the week. And I also want...
Peter, I'm just going to interrupt there. We actually have a time billing webinar coming up next.
Cool.
Just because it's, flows in with conversation here, that actually just got moved to December 27th. It's a Friday at 2 p.m. Where we'll go through all the different ways that you can do that within Design Manager. And there's some really cool features there now with the mobile app and how you can use the mobile app to track your time. There is a timer in the software as well. And then we also have pretty cool spreadsheets that you can use as well. So if everybody in your 45-person firm doesn't have access to Design Manager necessarily, you can use a template system where you can email out all of your timesheets basically and then import them all into Design Manager pretty seamlessly. So just plugging that because I actually talk to a lot of people that don't know that we have all those different ways to get time into the system. So I wanted to say that, and then we do have a few questions. So I don't know if you wanted to do those now or.
Sure.
Okay.
Why not?
So one of the first ones that came in is, do most design firms really collect 100% upfront on proposals? I can say from my experience is that is increasing in it is definitely becoming more mainstream to do that. It used to be when I started 12 years ago, 50%. But I think a lot of the times with the advent of the fabric manufacturers needing the 100% from their vendor deposit side, that a lot of designers, instead of collecting 50% on the rest of it and 100% on the fabric, they actually just went 100% on everything. Would I say that that's the majority today? It probably still isn't, but it's definitely increasing.
Yeah, and I agree. I think it was 2011 the first time I went into an interior design firm and had a design firm before I completely rebranded and only work in firms. Back then, it was all 50%, and I'm not going to tell you that every single one of my clients collects 100%, but it's definitely, like you said, increasing, and it's something that if you aren't doing it, you might want to try to do it because, having that money up front and then obviously knowing that whatever that percentage of your markup is that's going to be profit, having that up front and knowing that you have that and you can finish the job, I think is really important. And having that person expect that customer to expect to have to pay that. I know it could be, if the client says that, but why should you have to wait and hope to get paid the rest? I don't know. It's just something that, if you're not doing it, it might take a while to kind of get there, but I would think about it and kind of try to change your processes if you're not.
Mm-hmm. Okay, so next one isn't fixed price billing for time more difficult given the nature of the design world? Was each project so different? How do you ensure you don't leave money on the table?
Yeah, that's a great question. So most, honestly, I'm going to tell you that most of my clients are still doing the hourly route, just because you never know. But I have met other designers who have kind of come up with their own internal way based on you know, how their different projects are going, what their overhead rate is, and that kind of stuff, where they can feel confident knowing that whatever they're charging for that fixed rate is going to work. But either way, whatever you decide to do, I think it's very important to still keep track of your hourly time to make sure that if you do decide to kind of do that fixed price route, the flat rate route, it's still a profitable decision.
Yeah, I agree. And then the next question kind of fits as well. Same conversation. How do you enter time for charitable work? For example, a designer show house. My recommendation on that would be to put it in as a regular project, like you're doing it for a client. Everything that goes into there, all of your time, you can mark all that non-billable in Design Manager. You can default it to be non-billable, so you don't even have to check the box every time. And then what you want to do is you want to print the profit analysis at the end of it, and see, where you made profit, where you didn't make any profit. I know show houses, you don't make anything, obviously, but you can almost attribute, at least you're gathering all the expenses in one place, and you can run reports on that because it's a project. And then you can see how that contributes to the overall company, because you're going to be running, your regular financials for the company, and then you see, kind of where that project stands, compared to the entire business.
Yeah, I agree. Setting up different projects like that, and then you'll have all of those reports to be able to review.
Mm-hmm.
Any other questions?
Not right now. I don't think so.
Okay. Yeah, no problem. All right, so just a couple of other things to keep in mind as you especially this time of year, as you maybe, well, hopefully you review, how you were doing this year and what you want to achieve in 2020. As the year ends and your bookkeeping is up to date and reconciled and December is over, making a list of absolute fixed expenses that you need to keep the business running is so important, because then that's going to give you that overhead number that, like, in order to keep the business doors open, this is how much money we're going to have to make. And as you look at that also, I want to also say, can you negotiate a lower price or a better price for that list? So, can you call the telephone company and get a lower price and lower that fixed expense amount? Because if you can lower your overhead, then obviously if your sales amount stays the same, then there's more money for profit, or more money to invest back in the business and continue to grow. Also, you want to think about what's your goal for how much money you want to pay yourself in the year. So instead of like kind of waiting till the end of the year and saying, like, how much money did I make this year? How much money is left in the bank account? Okay, that's how much I can pay. You want to try to set a goal for how much you expect to pay yourself for the year as the year goes on. So getting yourself on a consistent payroll if you're not already. As your business fluctuates, having your CPA complete a quarterly tax projection will provide a more accurate cash forecast. So not only is it nice to have tax projections done by your CPA, so that when you file your tax return, there isn't any cash surprises. But even if, as your business fluctuates for whatever reason, now I work with different size design firms, so I've had clients where it's maybe just one person, and there's a baby comes along one year, so maybe the business kind of profits about half the amount than it did, but then in the following year, as things get back to normal, it comes back. Or maybe your business doubles in a year and goes the other way. Not paying in too much and also making sure you pay in enough is good for your so you're not getting a sticker shock on the tax return. But also, you don't want to pay too much in, because then you've kind of put your business on a cash crunch. So having the peace of mind, but also being able to budget out exactly how much you're going to owe in taxes, making sure those get paid in on a quarterly basis, and then with whatever the rest of the money that you have, you can make any decisions on the business and the rest of the cash based on that. Okay, so now after you've secured all of this information, you now have a goal for your pipeline sales, how much sales you're going to have to earn during the year in order to pay all of those absolute fixed expenses, achieving your goal for how much you want to pay for yourself, and making sure that all of the different, whether it's sales tax or the income tax that you owe, making sure all of that is paid in. You also want to make sure that you're keeping track of like whether it's a separate account or having that extra money and off put to the side. When you figure out how much the absolute fixed expenses are every single month, it's nice to have at least 2 months of fixed expenses separated so that if your pipeline slows down, if it gets to the time of year like now where maybe you've the projects that you needed to complete for the holidays are complete, and you know that January can tend to be a slower month, you have that extra cash put away to the side so you're still making your payroll and your rent and all those important things that are fixed, and then it's available, and then as things get busy again, as 2020 goes on, you can replenish that account as well. So keeping track of all these numbers and kind of figuring out what you see the business should have for numbers is a great way to kind of come up with your sales goals. So we're starting at expenses to keep moving towards what the end, if someone says, how much sales do you want to have next year? Well, this is the way to kind of back into that number and set a goal. Okay, so how do you figure out how your business is doing? Well, if you go to your income statement for the business, and so you go down to the bottom of your income statement and there'll be a profit number or a net income number. And then you might have taken out some additional owner's draw money besides just what you paid yourself in a salary. So you can go back and look on the balance sheet and figure out how much money you've taken out in extra owner's draw. So what I want you to do is kind of take that profit number at the bottom of the income statement, write it down, and then subtract the amount of owner's draw that you took out of the business and get that net number. And then after you determine that net number, I want you to find the number on the income statement that is your gross margin dollar amount. So it would be right after the cost of goods sold section. And then divide the profit, that net number, that first number there, divide that by the gross margin dollar amount. And based on that number, that percentage, I've kind of given a range of where you could fall, and kind of this is, there's a lot of different reasons why you could fall into this, but this is a kind of a very vague, broad range of where a business could fall, whether they're struggling right now or they're in good shape or they're doing great. This is just a very simple overview to kind of just get what do they say, like a 36,000 overview of where your business is at, okay? So this is a good kind of exercise to do. Now, for example, you might have invested back into the business quite a bit this year, and you know it, so the number might look lower than it is. You can also go back and compare numbers. You can do a comparative income statement. You can customize the income statement in Design Manager any way you want, and do it. Just do it every year and kind of see how you've grown. And then if you keep falling in that struggling business section, then you've got different decisions to make. So whether you cut expenses in the new year to try to grow your profit, or you increase your revenue in order to make more money. That this is a good range to kind of just see like, okay, I'm gonna quickly just kind of see where my business falls and where it is, and then kind of give you an idea of whether or not you need to make decisions, so that if you're struggling, you move yourself to good. If you're good, maybe even moving yourself to great. Okay, and then finally, I think this is one of the last ones, but how many bank accounts you currently have? So I have customers who only have one account, but I have also customers that have 5 to 7 bank accounts. If you are struggling to save money for the appropriate reasons, or if you think that you're not paying yourself enough, or if you struggle with making your sales tax payments in the following month, it may not be a bad idea to open different types of bank accounts and make sure you're using a bank that does not charge monthly fees in order to do that, like a minimum fee, that kind of stuff for each allocation. And then set up a process that consistently allows you, whether it's once or twice a month, or even I don't know, maybe on a quarterly basis, but ideally you want to do it at least once a month. Set up a process that you can consistently calculate the amounts that you need to transfer to these bank accounts, and then once you do, stick with it, and you'll know that the money will be available for when that type of things is due. So whether it's getting all the money for a project and throwing it into a client deposit account and then only bringing the profit amount to the operating expenses account, or keeping a separate account for sales tax, or some people keep a separate account for payroll, having a savings account and having a profit account. All of these are just different examples of different types of bank accounts that you can do, so that, whether it's at the time of the proposal or when the client pays an invoice, you're getting the sales tax, you're putting it in the sales tax bank account. Then when you file the sales tax return, whether it's the following month or quarter, that money's there. You haven't spent it for other reasons, and you're all set. Okay, so these are just some examples of different bank accounts you can set up. Whoops. So final takeaways. If you can't get in touch with your CPA more than one time a year, it may be time to find a new CPA. Make sure you're consistently reviewing new or existing independent contractor work requirements to see if they now should be considered an employee and added to payroll. Set systems and processes to grow in a healthy way. Create a forecast based on your goals. Monitor your numbers. Make sure your business is set up for continuing growth. Just paying attention throughout the year will get you in a better place. I know how boring and annoying finances can be, but the more you pay attention, the more your business is going to grow. And then finally, ways to get in touch. You can go to my website, thedesignercpa.com, or you can also follow me on Instagram. And I appreciate everyone listening today. Here's our email addresses if you have any questions after the webinar that maybe we didn't address or we didn't have time to get to, and you want to ask them, feel free to do that.
Okay, great. Thank you, Peter. We have one last question. It's an interesting one because I do think that, a lot of designers struggle with, what to charge and things. But basically, the summary of the question is, they're having a little bit of trouble keeping the same model of billing for all their clients. And they were actually wondering how often other designers, charge a higher fee for some clients and then like a medium plus markup fee for others, or should it just always be consistent?
I find that a lot of times when I see for like a markup, it kind of depends on what type of item it is versus the client that they're serving, or the vendor that they need to do. Was that it, or was it also kind
I
of
think
like an hourly rate too?
yeah, I think it's a combo actually, which
Okay.
it's funny because we have in the software tiers. for time billing. So you can actually set different tiers. And it was one of the aha moments when we were at a client recently, that they had no idea that it was in there. So it was neat for them to see that they could do that for their different designers. So they could charge one rate for one designer, another rate for another. But even on top of that, you can charge different fees per designer. So say a designer is working with this client, you mark that client as a tier 2 versus a tier 1, and you go up in pricing, or vice versa, you go down in pricing, kind of thing. So whichever way you want to work it, there's 3 tiers that you can play with in Design Manager.
And I imagine you could probably, I mean, it also, based on where you're at, or if you accept clients in
Yes.
other areas, setting that up so that if the client falls in a certain area of the country, then you're charging the rates that kind of are more consistent with that area as well.
Yeah, absolutely. So the tiers are actually set up on the employee, so that you can, or the project. So you can do it one of 2 ways. So you can set the project to be a certain tier, and then you can set employees to have certain prices in their tiers. So so each employee will have 3 tiers, and it'll basically be 3 text boxes, and you can put in, say 100, 125, and 150. So that'll be 1, 2, 3. So then you go to the project and you say this project is going to be a tier 1, a tier 2, or a tier 3, and that way you can kind of manage that without having to manually type in their rates every single project. It is by project though, so it's not like by item or something like that. So that whole project would have to be a tier 2 or something. But that's basically doing it by client, because you put the client on the project. Now we also have in there, not to drone on, but we also have the ability to do it by vendor as well. So that's pretty recent, maybe in the past year. We had vendor markups come onto the software, whereas it's always been item, component, that sort of thing, those kind of markups. You can default that by the company, you can default that by the project, but now you can also default from the vendor. So if you have this specific vendor that you always need to make sure that you get a 50% markup on them, or say like, oh, they're so expensive, I can only do a 20% markup on them, or something like that, you can actually default that through now, so that you don't have to play with that every time that you're inputting an item from that vendor. So there's things all over the place in Design Manager that can help with doing that. But to your point, I think geographically, that plays a huge part into it. But I from what I've seen, a lot of people play with it per client, and they don't necessarily stick to. I don't see a whole lot of like 50% doing flat fees and then 50% doing hourly. I think it's more or less like, they kind of try to stick to like 80% of the time they do hourly, and then 20% of the time or something like that they do fixed fees, or vice versa. They kind of make a decision there. But per client, I would definitely say that designers, from my point of view, definitely play with those numbers.
Yeah, I think that's a pretty cool feature to do. And then once you make a decision on what tier type of client it is, you know that all the time is being billed out at the same rate.
Yeah, exactly. I think that's it. I think that is all the questions that we have for now. And Peter actually just put together some classes too. He has those out on his website, so feel free to go take a look at those and see if you want to move forward with those. And then anything else, Peter?
I'm also working on a new class that's specifically related to sales tax for interior designers and the types of changing laws for each jurisdiction. And I'm hoping that will be out in sometime in January. So even if you wanted to go on my website and hop on and check out the school, and if there's no classes that interest you, if you sign up for free to enroll in the school, you'll get a notification when those new classes get taken out. So.
Great. And then Peter and I are always thinking things up for the future. So at some point we'll come up with a new list of some cool webinars or some high point events that we'll be putting together. So, make sure you check back on our social media, and you will be hearing from us. All right.
Awesome.
Have a good
Sounds
one.
good. Thanks for
Thank you.
attending, everybody.
Thanks so much, Peter.
All right. Bye-bye.
Bye.